Okay, testing. 1, 2, 3, testing. 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your bonds. Hey, so how does it sound? I got the new Razor cable. Is it clear as a bell? Was it the cable that made the scratchy noises? Hopefully it sounds wonderful. So anyways, welcome to Forex.Today. It is Monday. In fact, it is Monday, the 8th of March, 2021. Today I propose that not only do I answer your questions, technically and fundamentally, but we'll actually go through the calendar today, looking for event risk. And if you want, we could also do, a little commitment of traders report? Right on. Well, it's your way. Trader's Way with Trader's Wayne. So anyways, let's go. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. My name is Wayne McDonald. I am a currency trader. I love trading Forex. Been trading Forex not quite 20 years, but the majority of that. My background before that was venture capital and high-tech startups. Before that, I was in the nonprofit world. That's it. That's all. That's all I've done. But you might be interested in the last 15 years of that being, Forex and such. And therefore, I can help. I can share my experience. We can cover technical analysis, fundamental analysis, all that kind of stuff. So just ask questions, and I'll do my best to share my experience. I've done a few things right. I've done a lot of things wrong. But they've added up to, joy and happiness. Sunshine and the rain. Hang on. I can't talk and clean my glasses at the same time. It's only funny because it's true. I'm like, what was I talking about? Oh, yeah, I'm cleaning my glasses. So anyways, ask questions, get involved, treat each other with dignity and respect. You're in my office, so we can have a few laughs, but keep it professional, keep it clean. I'd like to thank Traders Way for being part of our community as well. Hey, you're a trader. You're going to need a broker if you don't have one already. You're going to need an execution partner that can enter your trades quickly, ideally not against you. I still remember getting emails from other brokers like, "Hey man, we're gonna trade against you as well as with you." You're like, "We're gonna slip for you and slip against you." You're like, "What? You're not supposed to be slipping at all." So, anyways, when you're trading real money, yes, you want competitive fees and spreads, but there's a lot of fly-by-night brokers out there that'll promise you a half a pip on the Euro USD, and you're like, "Oh, that's so awesome!" But of course, then they slip you here, slip you there, and you end up paying probably higher than normal. So, what you want is someone that you trust. So, anyways, Traders Way, yes, there are competitive fees if you go with an ECN or competitive spreads. But what we do know to be factual is there was a time when the Swiss National Bank lied to the whole world and then withdrew their support, and the market collapsed, and major brokers around the world went out of business. You're like, well, how could that possibly happen? Because if those brokers had entered the trades into the interbanking system, the broker would be fine. Well, they went out of business. So how did they lose hundreds of millions of dollars overnight? Well, maybe, I don't know, but maybe, just maybe, they were trading against their clients. So anyways, I remember I call up Traders Way or email Traders Way, and I'm like, "Hey guys, are you all right? Like, the Swiss National Bank just blew up brokers around the world. Clients are really concerned." They're like, No, we entered all the trades in the interbanking system. It's out there now. It's not on our, like it wouldn't hurt us. We hope our clients are fine, but, we don't trade against our clients. So if you like that, if that earns your loyalty and respect, then maybe consider them. So anyways, tradersway.com, open up a demo account, see if you like it. You're like, man, this is so good. Okay? But that actually happened, and fairly early in my relationship with them too, which is pretty cool. A real test right off the bat. So thank you, Traders Way. Peter's like, what happened to the stream on Friday? You mean non-farm payrolls? Hey, Peter, it was my 179th trade non-farm payrolls live at FX Street. 179th month in a row. Yeah, which is, I think, 1 month shy of 15 years. Which actually then, maybe this is my 20th anniversary. It's actually pretty interesting. Maybe I have been trading for 20 years. Wow, that's crazy. Really? Huh, surprising to me. But I guess now you're like, well, I moved 3 or 4 times, gone through 5 or 6 cars. I got a couple of kids. Yeah, well, I guess it has been 20 years. I used to have chestnut brown hair and fabulous green eyes. Now I'm just a chubby old man. All right. So yeah, I guess it's been 20 years, huh? Yep. Oh, one question here. Alejandro says central pivot point is high plus low plus not HLC divided by 3, because that would be high times low times closed. No, H plus L plus C divided by 3. But have you heard about the square root of H times the square root? Well, okay, so Alex, first of all, no, but let's look at it. What would the math be telling you? Okay, so you're saying, look at that. So you're saying the square root of H, so that H being high, times the square root of low. Is that right? So that would be, well, it wouldn't be pivot points. So let's explore the math. So do you guys know what the square root of H is telling you? This would be diminishing returns. Okay, so if you're trying to do diminishing returns, I'm not sure. Like, for example, we do this in economics. So hang on, let me just move to something. And oh, great, that's got a trade on it. Hang on, let's move here. Let's blank this. All right, so this is actually interesting. So you're talking about the square root of something, right? All right, so the law of diminishing returns. Law of diminishing returns. All right, does it go any further there? All right. Anyways. All right, so the diminishing returns. What? Let me think of a good example. All right, you're a baker. You're the only baker in the economy. Okay? And you decide to get an electric oven instead of using a brick coal-fired oven. Okay? So let's do this. Okay, so you have an oven. How important is the first oven in your productivity? Sorry. Wow, I didn't wake up this morning expecting to do this. You guys are awesome, by the way. You guys are awesome. This is pretty funny. All right. Yeah, most important, right? So let me, so what we're trying to get to is the square root of productivity. Let me think about this. If I go 3 to 3. All right, let me think about this. Okay, let's say it's very productive. Okay, 3. And I'm trying to get to the square root of y. 3, so the second one, wait, I have to do 9. Hang on. Let me think. It's going to be this way. 3. So one oven is very productive. So I'm trying to get what's the next one. It's so 2. Wait. So it's going to be 9. Shoot, let me think. Okay, it's going to be like this. So 9. This is what I'm trying to get to. I'm not sure about the math here. Needed a little bit of time to think. All right, so let me tell you where I'm trying to get. Okay, I'm trying to, what I'm trying to get to is, if there's only one baker, going from 8 ovens to 9 ovens is very little change. But the first oven is extremely productive. Okay, 2 ovens would be more productive. See, I was trying to get to the right math, though, and I don't know if I can do this quickly on the fly. What you want to show is, 9. I know how to do it. I'm not, boy, 9, and then the next one. So the square root of 9 is 3, right? And so you're going to be working your way backwards. So 9 gets you to 3. Okay, and you're right. So what you're showing is every time you add an oven, there's very little change. Right? So like it's much different, right? 2 to you need, yeah, so that would be it. All right, so 3 ovens, right? 9 ovens and 2. Oh, gee whiz. All right, I'll have to work on it. I don't want to spend too much time on it. There's a diminishing return. So this whoever pivot points you're talking about would have pivot points that would look like this. Okay, so I'm just trying to do the math quickly in my head and then explain it. Okay, so I don't know if, I mean, look, that might be helpful. It might not be. I mean, if you do this, you're going to hit a lot of things that are going to be support and resistance anyways. See, one of the things I like about the standard math, okay, the standard math is the central pivot point instead is equal to high plus low plus close divided by 3, which is, it's a weighted, okay, it's a weighted average, which now, I'm going to have to do equal again. This is now equal to me, market sentiment. I know I didn't spell that right either. Excuse me. It's not average. it takes into account where the close, which I think is the genius part. Okay? So we're adding some thought, some humanality into the math by saying, how did we finish the period? We might have started bullish, but did we end bullish? Did we end neutral? Did we end bearish? And if so, let's add that to the math, to the new pivots. I like that, okay? The second part about pivot points that I like is it incorporates standard deviation. Okay, so how high did it go from the average? How low did it go from the central pivot? And move that standard deviation forward to say, well, if the market conditions haven't radically changed, then the math should be about a standard deviation, or maybe 2 standard deviations, but we're going to stay within a normal distribution in the data set, right? Like the new data should be within the normal distribution, right? In this case, you want to look at it, you would have thin tails and a fat bell. It would be within a normal range of standard distribution. And to me, that all makes sense. Okay? That makes sense. Like the math makes sense. And of course, maybe it makes sense because I've been using them for almost 20 years and they've proven to me a million times. Okay, now why? So let's think about this. Why would you want the square root of h and the square root of low? Right? Why would you want the square root of the high and the square root? And that would get you, right, diminishing returns. This curve probably curves the other way. Why would you want that? And I'm trying to think about it, and I don't get it right off the bat. I know what the square root's trying to tell you, so why would you do it? Mostly to be different is my first gut instinct. Like, it makes me think, like, if these pivots do this, like, what would the point of it be? And it might just be to, like, sell you a new program. Oh, I got this new way to make lots of money easily. I've seen those emails and I've seen the pitches and I've seen the salesmen that do these things, and I wouldn't want a new trading technique. Right? So I don't know if it's interesting. No, I don't see it. So again, you're going to look at this. Usually you're using it to look at this. And in fact, the interesting thing is I'm putting together a program to kind of teach this math anyways, which is kind of interesting because in certain situations you're going to want to know this. And this is constant growth and this is diminishing growth. So this would be the square root. So anyways, interesting. I don't get it. I don't think I would want that. Again, you're going to, using that math, you're taking two curves like this, like a curve like this, and you're taking a curve like this, and you're saying that's the resistance and that's the support, and somewhere in there's going to be an average. So it's probably like this. I don't know. It seems like to get rid of the negative numbers, but no. I mean, you're just inversing it, right? So there is no negative number. You could just do it by doing USD over euro, right? It's just the inverse. It's the same. So you don't need to get rid of negative numbers in this case. So I don't know. It's not my technique. It doesn't make sense to me. The pivot points that have been used for 50 to 100 years, that makes sense to me. The other one, it just seems like a trick. I don't know if it's useful. Maybe it is. Not to me. So I hope it works out. Okay. All I know is that looks like support. That's cool. So would that, No. So I'm like, no. But, I've been doing this long enough where I'm set in my ways. I don't need anything new, right? But I'm skeptical of the math, that's all. I don't know why you would need that. Okay. Right? Doesn't that make sense to you? Let me ask you this. How far below support did price deviate last month? Okay? Cool. That's how far price deviated below the mean. So that's where we are now, the M1. See, like, you have to understand the math, right? When you do the math, you're like, oh, well, that's what I want to know. That's the type of information I would like to know. How far did did price deviate from the mean last month? And could that be a way to project how far we will deviate from the mean this month? And in this case, right now, it's done it to the pip perfectly. So I'm like, oh, well, I understand the math. I'm like, oh, okay, that's cool. That might be helpful. It's not written in stone. It's not handed to us from the gods. But it is math. So why would you want something different? Take the diminishing... Yeah, I don't get it. It just sounds like a trick. So I hope it works for whoever uses it. Okay. All right, so we got our move. Hey, by the way, do you remember when the stock market was at all-time highs? And I said it's going to come down in March. It's going to be very bearish. Everybody get ready. It's going to be very bearish. The dollar's going to get very, very strong. Can I take credit for being right yet? Shanghai dropped 3% today. I mean, when can I take some credit for being right? It's important for my trader psychology to pat myself on the back. Okay. Yeah, good. Okay. That's cool though, right? Cool. Very nice. I should run for governor. Well, the problem is I treat women with respect, so I'd never make it in politics. Happy International Women's Day. I was telling my wife, I said, are you an international woman? She's like, what do you mean? I'm like, well, it's International Women's Day. If you're domestic, I don't have to praise you. And then I'm like, wait, do you think they mean women global? Like it's globally Women's Day or global Women's Day or like women from around the globe? It's not just international women. So, yeah, it's just, I'm a stickler for writing. And, like, I wouldn't have called it International Women's Day. It would be Global Women's Day, in my opinion. All right. But anyways, if you're a woman, congratulations. Happy day. It's an insulting public holiday and meaningless. Well, imagine I was governor of the good state of Georgia, and I came out and I said that, Marina. Oh my goodness. All right. So anyways, cool. Very nice. We're on our way to the 200. Very nice. Very nice. Very nice. Let's add some distinction to this. Where are we position wise? Yeah, it wouldn't last very long, though, is the issue, Marina. Like I said, this is going to be a challenging month. You're going to need to be patient. You're going to need to be disciplined. Okay? But I said trade lightly in the month of March. Realize there's multiple forces that are acting upon you and your trades. You can be a bear, that's great on this one, but realize it's probably not the long-term trend. So take your swing and drop a stop. But as we near the middle and the later period of March, you may want to think about the long run again. And so the dual forces of long run versus short run is going to make this a trickier month. So the number one goal would be to not lose a ton of money. Okay. Mohammed says, would it be possible? Okay. Don't ever open a question like that. Just ask the question. Will the Fed do something opposite to what we are waiting? That's what you should be thinking about. What is the likelihood the Fed announces a new program on March 17th? But this is what I was asking you like 3 or 4 weeks ago. Okay? So, right? So, Muhammad, that's what you have to think about. So, what did Jay Powell... So, Jay Powell spoke 3 times recently, and I asked you to pay attention to all 3. Because they're trying to be transparent. So they're going to tell you. It's not like he said something last week and then at the March meeting says the opposite. Now, the best he could probably do at a March meeting, in my opinion, is hint that they're thinking about maybe making a change. But making a change, I don't know. That's going to be... okay. Now, one of the things I've been trying to explain to you, is I think the market is overreacting because they don't understand what they're doing. No, there are plenty of professionals that are very good traders. But remember, like any sample size, right? Even professional traders can be stupid. Okay? So anyways, what I'm trying to say is they see large increases of, I don't know, let's say of anything. So we'll say big I is inflation. So let's say they see a big change in inflation or inflation expectations or whatever they're measuring seems to be going up. Okay? What the market tends to forget about is it's relative. Okay? So back in July, I did a thing called Off the Charts with Wayne McDonald. And I made a declaration that even though GDP came out negative, okay, a negative number, negative, okay, and the goal is positive 2%, I said in 2021, we are going to have 6% growth. And it's going to be startling. It's going to be unbelievable. Oh my gosh! 6%? That's crazy! Okay. Was anybody there for that meeting? It's recorded, of course, but was anyone there for that cigar and whiskey conversation? Yeah, Alejandro remembers that. So what I was trying to tell you is a small number, let's say actual growth, over a negative number, okay, will produce a big change. Okay? So we're looking at, like, inflation is through the roof. Inflation expectations. Okay. Oil went from 0 to 60. That's unbelievable inflation. And by the way, this gets priced into almost everything: food, clothing, transportation. It all is impacted by derivatives of crude. So that's a lot of inflation. It's up 1 billion%. What's the normal price? What was oil priced at before the collapse? 50. Okay? The oil being at 0 was an exogenous shock. Oil producing countries went into a price war. And then we got hit by COVID, which killed demand in the middle of a supply glut, and oil actually went to 0 one day. So are we really up 1 billion%? Or is it more modest? If there was no COVID, if there was no price war, would we be at $60 anyways? Yeah, actually, yeah. Yeah, I think we would, because the stock market still would be up, and without COVID, the rest of the world probably was still demanding more and all that. So I don't know. I think we would have been at $50-$60 anyways. How many people would agree with that? And by the way, you don't have to agree with me, but if there wasn't a COVID-19 situation, do you think we'd be about $60 anyways? Well, then there was really no fantastic growth. It's only fantastic growth because it was at 0 and then it went to 60. A 1 billion% increase. Okay? So here's what I'm getting to. Let's say we get 2021 and I'm right. Let's say it grows at 6%. Okay, what I'm focused on is not these headline numbers that come out. I mean, we talked about this last year. I told you this was coming. So that's not a surprise. So what's 2022 GDP going to be? Uh, 1.4. Well, you guys say 70, 75. Well, then we've actually had deflation. Or disinflation, not deflation, disinflation. So it would have grown, but even slower than it did in the previous person, right? Okay. Does this seem right? I mean, maybe it's 1.8. Okay. But what do you think? I'll put it 1.8. Now, how do I come up with that? Okay. GDP. Potential. GDP's star. Okay. And we were here, and 2020 will get us here. So in 2021, the productivity gap will be significantly smaller than it was before. Okay? So the way I drew this for you a year ago is this, right? I said this is the productivity gap that, that Powell said he needed to overshoot, which, this puts us at the bottom of the trough, and that we will work our way back to potential GDP. And this is 2021. Okay. This area here, 2021. Let me draw it just slightly different. Okay. 2021. This was 2020. Wait. COVID actually hit us in 2020. Yeah, so it'd be like that, right? And whatever, something like that. So we'll have a much smaller gap, and then in 2022, by the end of 2022, so let's say at 2023, we will be slightly above GDP, and we'll be at 2.2. When did Jay Powell say he was going to consider raising interest rates? 2023. Okay. You can do it both ways, Alex. So that's what Jay Powell told us a year ago, and this is what I explained to you. So it's not like I'm making this up as I go along. They already told us. 2023 is probably when they're going to. Now, people are like the big debate. Well, is it going to be in March or September? Who cares? But by then, we will be above potential GDP. We'll be at full employment or close to it, the new full employment. By the way, I said the new full employment's 5%. Again, I said that I said that what? I'm trying to think. May or June, probably. May or June of last year, I said the new full employment is 5%. We were at like 3.2. Okay? Okay, cool. So anyways, if you put it all together, Jay Powell's already told us in 2023, that's when they'll start normalizing. And by the way, that's when the dollar's really going to get weak. But for all of that to happen, we need the rest of the world to recover too. So maybe Europe drags us down, or maybe we just decouple from Europe and it's just U.S. and China take over the whole world. Can you imagine? Can you imagine tourists in Paris eating at Applebee's? The American way. I'll never forget. I was in Seoul, South Korea. Oh my God. I don't know. Gee whiz, that's got to be 20 years ago. Anyway, so I'm in Seoul, and they're like, "Hey, do you want to go out for dinner?" I'm like, "Yeah, let's go out for dinner." They're like, "Do you want to go to Outback Steakhouse?" And I told them I'd rather die. I'm not coming all the way to South Korea to eat at an Outback Steakhouse. There's just no way. You'll have to push me out the window. Yeah, I'll have the fried rice dinner at Applebee's in Paris. Yeah. I'm sorry, monsieur. We are at the Frog Legs, but we have spring rolls. Yeah. Oh, I love. Koreans know how to barbecue. Yeah, you know what? That's probably what I said. How about barbecue? Right? How about some barbecue? Anyways, what do you think of this, guys? If you thought the dollar was going to weaken now till the end of the year, is this a reasonable price to think that there could be a bouncy bounce? Could this be it? Could this be the bottom? of 2021? What do you think? Brazilian barbecue is fantastic too. Yeah. Where's my double bottom? Alejandro says, yeah. Right? Well, the thing is, yeah, it is like that was the plan 2 weeks ago, by the way. Now, it was, right, we had this plan here. And I'm telling you, it's hard to believe. You're like, dude, we just hit 123. There's no way we're heading down to 118. It's amazing, huh? Pete, I don't even know what that is. It makes me interesting. I'm going to copy and paste that. Maybe you misspelled it. I think you misspelled it, dude. Anyways. Okay, so imagine that. This is what the swing trading group came up with. Huh? Yeah, I don't know what it is, though, Peter. Maybe Google it, see if you can find it. It's probably interesting. It sounds interesting. All right, so anyways, yeah. Now, I think the interesting point here, too, is that many newer traders probably didn't have that planned out 3 weeks ago or 2 weeks ago, whatever the case may be. Okay. And what percentage of the market didn't see this crash coming? Wouldn't it suck if you built up a big fat position and you've given it all back? Yeah. Scary-doo. Cool. So anyways, you got to think about it. Okay. So here is the interesting thing as well. This is the week where I said exit. This is the week I said sell. Okay. Right? We had our sort of, I don't know if you want to call that the false rally or this the false rally, but this is the third week false rally. There's the, right? And then this is the march down. So we had this exit, sell, literally this week. Okay. False rally. Then I'm like, I don't really know. Okay. This is the profit-taking counter trend back to the central pivot point. This is selling at resistance with March being a sell. And now we're trying to be so bold to say this. But isn't that interesting? Right? We had this exit planned out six or 7 or 8 weeks in advance. We had this sell, a year in advance. The third week rally, weeks and weeks and weeks in advance. This is just, you have to trade as you trade, but this is a counter trend. This is the definite, March is going to be dollar strength and yen strength, right? Dollar and yen strength at the open of March. Okay. We said between the middle of Feb to the middle of March, right? To be clear, middle of March will be here. This period will have dollar strength, yen strength. Okay? And then by the middle of April, I'll be selling the US dollar. Isn't that cool? I hope you guys like thinking ahead versus reacting. Okay? Okay? That's a heck of a lot of luck. Or there's a repeatable pattern. It's one of the two. Pete, yeah, I'll have to look that up. What that is. I had. I'll look that up. Cool. Thank you for typing that in. I had Prime New York Strip on Friday, and that's nice. Ribeye is also nice, especially bone on. You know, the big thing now is the tomahawk chops, which used to be difficult. Now I find them everywhere, but because they're like 2 inches thick, like literally, right, bigger than my brain, they're difficult to cook. I mean, you have to have technique to do it right. So what I did with the Prime New York Strip, because they were a normal thickness, I don't know why they do this. Like, let's take the best steak and then make it thin. So what I did is I cooked it with only one burner on it full, but not under the steak, just off to the corner. And I let it cook for, I don't know, 15 minutes, just trying to melt the fat inside the steak. And then I put it right on, ripper hot, right? Ripper hot grill. And then charred it on the outside and grill marked it. And I typically don't cook it that way. But for a normal thickness New York strip, it doesn't come out medium rare, but you want to melt that fat. That's the best part of a prime steak. Anyways. All right. Enough about that. Let us go to Forex.Today. La 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 la. La 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 la. Wonder what happened there. Where's my certificate going? Good bitch at somebody. All right. This week, this is a lot of information this time of the month, so let's go through it. Aussie new home sales. Last month was horrible, if you remember. Oh yeah, and it says it here. Cool. Horrible. New home sales were horrible. Yeah, I'm here. I don't like cooking indoors though, but yeah, sometimes I do it that way, depending on that. A sprig of rosemary, yeah, sometimes I do that. I have a Le Creuset searing pan for that, so it's got the ridges to keep it up off the butter. So what I'll do is that. I used to have a block of salt, and you put that on low heat for a half an hour, and then medium heat, and then a little bit higher, until the salt is like glowing magma. If you heat it up too quick, it cracks. But I used to do that. So you put on low for a long time, and then you come up, and then you can turn it up fairly quickly. And all of a sudden, the salt itself, a block, I'm telling you, an inch thick of pink salt, Himalayan salt, excuse me, it'd be glowing. Okay? I mean, so hot. I remember one time I threw butter on it, but you don't actually need the butter. I didn't know. I was amateur. So I threw the butter on it, and the butter hit it and burst into flame, like exploded like it was gasoline. I'm like, holy shit, that's hot. So I didn't do the butter anymore. So you'd put the steak right on top of the glowing salt, the magma salt. And it doesn't, you don't taste the salt. It's just non-porous. It's like a stone at that point, but it's non-porous, and of course non-bacterial. So anyway, oh my God, that was a cool way to cook it too. Johnny says the new air fryers. So you could try this, Johnny. Cook your steak sous vide, and then drop it in the air fryer. Try that. Yeah, try that. All right, so let's get onto this. This is probably not going to be... See, even if it comes out negative 20%, that's going to be an improvement. You see that? All right, European GDP. Okay, year over year, maybe it won't be so bad. Okay. This is the one I think you should pay attention to. I don't really care about your European GDP. Sorry, European. All right. Governor Lowe's speech, especially if this comes out a good number, which means even a bad number will look good relative to the month before, which we were just talking about, right? It'll come out good math. So if it's not nearly as bad, maybe this gives, Governor Lowe the strength to come out less hawkish or dovish. They've been a little bit dove, right? Okay. How many of you guys trade the Chinese currency? Sure, is that right? Where do you live? Well, what currency are you actually trading? It's not CNY, right? Oh, you like HKD. Okay, so there's Hong Kong. Pakistan. Well, that's the funny thing. Sure are. I was watching Joe Rogan's blog one time, or vlog, sorry. And he was interviewing someone about, about salt, and they were talking about Himalayan salt. Right? Or Himalayan if you're American. And they're like, oh my God, it's a scam. It's not even from Himalaya. They got it from Pakistan. And they're like, it's a scam. Look, this stuff actually came from Pakistan, not Himalaya. And I'm like, oh my God. Oh my God. It was just funny. And they went on and on. Well, maybe it's not even really pink. Maybe it's not really pink. Maybe I'm like, oh my God. Oh my God. Yeah. Well, guess what? Pakistan has a few Himalayan mountains. It was just funny. I'm like, oh my God. No, it can come from Pakistan. That's okay. It's okay. Could come from India. I've even been on, I've been on the Chinese side of the Himalayas. Well, Chengdu anyways. But, if you fly into Chengdu and if you want to go up to Tibet, you can bus drive from there for a few hours and then you can hoof it. But anyways, so I've seen the Himalayan mountains from both sides. The farthest north in India I've been would be Chandigarh. Chandigarh is pretty far north. So Chengdu and Chandigarh, looking at the Himalayas from both sides. So what a beautiful part of the world, anyways. You've been to the mine. That'd be an interesting place to visit. I don't know if it's pretty or not, but yeah. Usually mines are not pretty. Like, what a beautiful mine. Okay. Anyway, so my point here is this is onshore. And you probably trade offshore this currency. But anyways. Nepal? Yeah, I've never been to Nepal. We have quite a few boot campers from Nepal. One boot camper became such a good trader in Forex, he became the local TV guy. No joking. So this boot camper, what goes on television, on the nightly news report or something, and talks about the foreign exchange. Like he's the Forex guy in Nepalese TV. And then they had that earthquake and landslide and stuff, I don't know, 10 years ago, and lost his computer and all that kind of stuff. So I ended up sending my computer all the way to Nepal. So you would have, because computers were hard to get because they were all destroyed. So everyone needed a computer. Well, he wanted one with that could run 6 screens. So anyways, so you can't get a 6-screen PC in Nepal after the earthquake. So anyways, so I took one and sent one. I'm like, I got a bunch of them. So I sent them one. Cool one, really heavy server. I remember it being heavy, but probably needed to be heavy to go all that way. All right. So anyways, so he's done well for himself. I probably need to follow up. I'm ready to travel the world and go see everybody. So there's a great excuse to go to Nepal. I'm like, honey, I'm sorry. I don't really want to go to Nepal, but I have to. So I'll call you from Kathmandu. Oh my God. That'd be a wonderful visit. All right. Moving on, so we'll call it Australia Tuesday. Okay. And by the way, you see how low inflation is in China? So China is doing a bunch of stuff now to stimulate the economy and all that kind of stuff. So there's going to be some good opportunities to invest, by the way. Bhutan? Yeah. Bhutan sounds great. All right. Okay. So lots of good stuff going on in the world if you're an investor, and you can still lock in some cheap money. So interest rates have gone up in the United States. Well, then borrow money out of Europe. Get some free money out of France or something. So get some free money and start investing it in places like China and India. Okay. India has also got a lot of reforms going on right now that I think are going to be fantastic. And it's like the government and the central bank and, there's a real focus in modernizing India. And I'm telling you, it's going to be, the last 30 years was building infrastructure in China. The next 30 years is doing the same now in India. When you go to China, and I've been all over the place, all over China, it's all been built. In fact, they're knocking over things that are 30 years old and building new skyscrapers because a 30-year-old building is too old. So, what are you going to do? Build the second skyscraper? You're like, no, forget it. So you got to go to India. And India is still There's not a lot of infrastructure. There's a lot that can be added. There's a lot of catch-up that could be going on there as far as potential growth. And I think India is going to be the future, and that's what my kids will probably be doing. So, yeah, get involved. Anyway, so all this accommodative policy is really good if you're an investor. You can borrow money cheap, and so like China's going to recover. There's stimulus there. They're doing stuff. So over the next year or two, China is probably a great opportunity to invest in, right? But in the next 30 years, India will beat, right? So what'll happen is, do you remember when China used to have like 10% GDP, then 8% GDP, and then 6% GDP? Okay, that's going to slow all the way down to 4%. And India will be growing at 10%. Okay. So anyways, looking here on Wednesday, CPI. Yeah, okay, good. Especially now because everyone's freaking out about inflation, right? Okay. So we're still at 1.6, let's say, but this is going to pop up pretty quickly. People are going to freak out and they're going to say, oh my God, Jay Powell said, this and that. And remember, it's relative. So these numbers can go up really high, but then in a year, they're going to drop significantly. So let's just argue by the end of the year, you'll get like year over year inflation, at like 2.5% or 3%. Okay. Then in next year, compared to our 3% now, so let's just say CPI comes out 3%. I'm not saying it is. Let's just pretend. It comes out 3% this year, and next year comes out normal. Let's just say even this year's normal, but 2020 was abnormal. So this year, relative to an abnormal low year, then this year being more normal looks way bigger than it really is because it's just a normal number over a small number. Okay? Cool. So now, next year, right, 12 months from now, we're going to compare inflation next year to inflation this year. So if this year is a big number and next year is a normal number, then it's going to look small. And that's what I'm pricing in now. This is the logic that I'm using to say everybody's freaking out. Bond yields are going crazy. Markets are doing what they're doing. And everybody on TV is saying, look, it's because of inflation. It's because of inflation. The Fed has to do something. Two things. One, it's not inflation. If I could predict it 6 months in advance, then it wasn't what's happening now. Because I didn't calculate high bond yields 6 months ago, but I calculated the drop in the stock market 6 months ago. So it's not based on some variable now, it's based on some other variable. But if you're only looking at now, then you're going to say, well, what caused this dramatic move? Oh, well, look at this other thing. It must be related. This is a fallacy of humans. We draw patterns from everything. Okay? And that gets to be a problem when you're like, well, let's sacrifice a virgin. And then all of a sudden everything normalizes and you're just like, oh, we appeased the gods. And now all the virgins are like, oh man, I need to not be a virgin. Because it's going to happen next year. They're going to say it's the sacrifice, right? No. March collapsed. Whether you kill the virgin or not, by April, it's going to rebound. You see that? April's going to be upward. Okay? And it's not because of a normalization or whatever they're going to tell you why the market is right. Oh, well, the rotation is over. Okay, fine, whatever. Okay? So next year, we're going to have disappointing inflation. And the Fed is already telling this. I don't know. Like when I say, listen to Jay Powell, watch the speeches, read the notes. I don't know if you actually listen and take that advice. But he tells you, dude, the numbers are wrong. The way that you're looking at things are wrong. We're going to do nothing because in 2022, inflation will be low. So you're looking at data now that's skewed. And you're freaking out because you think we're going to do something, but we're not going to do something because we don't need to do anything. You should do the math. So, right? So now if they jack up interest rates, then next year inflation's low. Oops. So this is all built into the model, by the way. This is why you need to know economics. So whoever's freaking out and all the people on TV, don't believe them just because they're on TV. Don't believe them just because they have $1 billion under management. Okay? You can still lose the $1 billion. Okay? So, understand what you're doing before you do it. Anyways, right? All right, so there you go. That's all I have to say about inflation. There's our 2 and 3 year outlook for inflation in the United States. All right, so kitty cat, okay? This is nice because the central bank gets to talk to us. Okay? There shouldn't be any radical changes, but they will tell us what they think. That's the most important thing. Now on Thursday, ECB also gets to talk to us. I don't really care about the interest rate decision. I care about the policy statement. Okay? Cool. And then Friday. Mixed news, mixed news, mixed news, mixed news. Okay, GDP out of the UK. Right on. Cool. It's backward looking. Great. Fine. Okay, PPI. This is going to be hot because it's going to start incorporating, it's input prices, right? So input commodity prices are high. So it's going to be hard. You want to strip out oil from that, because we know oil is up 1 billion%. And then kitty cat jobs. Okay, typically they're released with NFP, but this time it ain't. So very cool. And a negative number is not welcomed. Okay, now this might be interesting. All right, so we got a nice week. Did you guys look at the COT yet? Okay. What do we see? Okay. You see it? Do you? Well, it's not just a tick up in shorts, but less bulls. Okay? So, bulls are out of the way. Bears are having their day. Question is, will they take profit? Okay? And notice that it all happened at the right time. Okay? Now, some of that might be getting stopped out and stuff, but the thing is, let's bring it back. Okay? I prepared you 6 months in advance for this at this time. More and more bears piling on. Okay? And the big move happened. You can see there was an up and then a down, which means a lot of bulls got stopped out. This was a game changer right in here. Okay. Okay. And lots of bears sold right there. Okay. So are they right? Are they acting logically? Some bears are here, some bears are here. All the bulls got knocked out. Not all of them, but many. And the question is, what's the next move? Because we're not interested what happened last week, but we understand what happened last week. So where are we going to be over the next 2 or 3 weeks? What do you want to see happen? Will these guys return? How are you going to treat it? How are you going to play it? What's your plan, Stan? Okay. If you can't plan it now, you're not going to do it. I'm telling you. Oh, did the static come back, guys? Really? It's a brand new cable. Sangam, why don't you join fxbootcamp.com and take the fundamentals course where you learn hours and hours and hours and hours and hours and hours and hours about central banking. Okay? Oh, yeah. Then don't worry about it. But you got to find a way to save money. Well, I don't know what it is. I'm running out of things to, yeah. Running out of things that could possibly be doing it. Okay, it's a brand new Razer microphone cable for my Razer microphone. And it's not like a cheap cable I got from Amazon Basics, right? Like, it's made for this microphone and it's high quality. So I'll try another. I think I have one more thing it could be, but I'm running out of ideas. Well, if it's me touching it, but it wouldn't be static, I guess, unless it's just. Well, Guy's our expert, our resident expert. Yeah, so you're like, it's only this stream. Turn down the gain. Well, I've messed with that a few times, but let me try it. All right. It's weird that some of you hear it and some of you don't. Deplorable, don't be despicable. All right, HK says it's much better now. Well, good. All right. All right. Well, thank you. I will continue to work on it. Thank you. Thank you for your feedback about the feedback. Let's do some gold and oil. Okay. Just waiting. Just waiting. So this is that we have to breach, pull back and long, and of course we haven't done that. So it ends up being the same kind of knowledge here. Now we need something like this. I'll do it like this. Now we need something like this. Okay. Okay, and now we wait. Okay. Now we wait, and we wait, and we wait, and we wait. Do I trade stocks? Well, I don't trade stocks, but I have a large stock portfolio. So I have a self-traded account, which I trade on behalf of my company. Well, wait, is it technically my company? My company contributes to my personal retirement account. I also have a wealth management team that does that, manages my mutual funds and my ETFs and all that kind of stuff. But that's, again, retirement accounts. But do I trade stocks? No. If I go back many years now, I guess it was about 15 years ago, I traded Forex, I traded futures, and I traded stock. I don't think I did options. And I found out the hard way that the taxation system in the United States is so complicated that it took almost a year to do my taxes. It took like 8 months or something. My tax filing was hundreds of pages long. I'm not joking. It was like the thickness of a phone book. It cost me a lot of money, many, many, many thousands of dollars just to calculate my taxes. Meanwhile, you're doing quarterly taxes and all that kind of stuff, and it's right. But what I learned that year was trading stock indices has its own tax treatment. Trading individual stocks has its own tax treatment. Trading like futures, so I did like oil futures. I did a lot of oil back then, traded a lot of oil. And that was taxed with its own tax treatment. And whatever else I've forgotten, I forget what I just said. But anyway, so basically it was like I had 3 or 4 or 5 different businesses. All the trades had to be calculated individually, like all the oil trades over here, right? And then all the cash trades here, all the futures trades here, all the Forex trades here, all the indice trades here. And then once they were separated, then they had to calculate profit and loss and whether I had trader tax status or not and various other things that go into it. And then, then as an aggregate, then you have to do, your expenses and all that kind of stuff. And long story short, it was complicated enough where I overpaid my federal taxes by $100,000, and I overpaid my state taxes by $50,000. So I actually got, for the first time, tax rebates. I got tax rebates because I paid too much. So I got $150,000 in tax rebates. Actually, I only got $100,000, whatever it is, $112,000 or whatever it was that year from the feds. From California, I got an IOU because California didn't have the $50,000. I'm not even joking about that. I got a letter like, "Dear Mr. McDonald, yes, you overpaid. Yes, we owe you $50,000. We don't have it, but we intend on paying you." No joke. So Well, I know. I was asked about it, Barry. So the issue is it's too complicated. So what I learned that year, Richard, is that I can get almost everything through my Forex account. So now there's gold and oil, but it's not really gold. It's not really oil. It's not futures, right? They're all attached to a dollar, and somehow there must be derivatives of some sort. I'm not actually sure how they do it, but it's treated like it's cash, like Forex. So if I want to trade oil, I have that option on my trading platform, but it'll be treated like Forex. I don't have to trade futures. I don't have to trade, so that's all separate to the side, right? And everything, if I can't get it directly on my account, I can get it indirectly through correlation. So I could say, well, stock market up, Aussie yen up, and find out it's 90% the same trade. So I can get it, but earning interest and having better leverage and better tax treatment. So now everything is Forex. Okay? My trading, as far as trading, everything is Forex. Okay? Now, personal investing, retirement accounts, and trusts and all that kind of stuff, that's separate. Okay, that's separate. So that's why you got to have your company, you got to have you got to have your trust, you got to have, the United States is complicated. But if you can afford it, America's made for you. I mean, obviously, if you're rich, America's a great place to get richer. But everyone has access to the game. Okay. Sav, it wasn't like typically credits have to do with, washing losses and stuff like that. I think I'm pretty sure I just got a check, but I had to wait like 4 months or something. 4 or 5 months later, I got a check for $50K. I'm like, oh, sweet. But I had to wait. It was pretty funny. You went Canadian? Very cool. All right, so that's that. So that's what we need to be interested in gold. Gold. Okay. This gap over the weekend was caused by an attack on a Saudi Arabian oil field. And now we've probably learned about how much damage and will it actually impact the flow. You might find out that it was bad, but as far as demand, that's constant, so we'll call that D star. Supply, at first you might have found out that the thought is, oh no, we're going to have the supply curve shift to the left on exogenous shock, and therefore price would rise. But then we're probably learning, oh, well, it actually wasn't that bad. There won't be a shock to supply, and we move back to equilibrium. Okay. Now, sometimes, when you get a double shift, there's it's indeterminate. So we're going to figure this out where really it shifted this way. So we'll call this S1 to S2. But then we found out that's wrong. So price first goes up. Then maybe there's only a small supply shock, and therefore, we shifted back. I didn't draw this right. We shifted back. So anyways, and it comes back down a little bit. So we're going through price discovery to find out what the right price is. So this is an overshoot. Okay. And I think the attack was on Saturday? Right? So the gap happens because people call and like, oh my God, buy oil. And then, but the market doesn't open until later, and then it pops, but it's late. Okay. So whatever. Don't freak out. Don't freak out is the message here. So oil will do what it wants to do. Okay. So I don't know. What do you want to do? Okay. So maybe that's a better price. Yeah, Sangam, well, don't worry about it. We swing trade. That's what the group does. We meet once a week to set up swing trades. Make sure you've joined the course, fxbootcamp.com. You've watched all the videos, Sangam. What you don't want to do is just like jump into swing trading, hoping that I'm going to teach you how to swing trade so you can make enough money to pay for your membership. Don't do that. Okay? Our swing trading group is not about hand holding and teaching. We actually just do. We plan. So you have to go through all the courses to learn. You don't want to cut a corner. So start with FX Bootcamp. It's a one-time fee. Watch all the videos multiple times. And then when you're ready, you'll just want to join the live group. So there's no details because I don't sell you. Right? Right? So, yeah, I don't give you any reasons to join. It's true. But we do meet once a week on Thursdays at 2 p.m. Eastern Time. Yeah. That's it. That's the sales pitch. Yeah, no, I know. That's why you want to do all that first, Sangam. Right. We do that, Richard, for the other group. Okay. For our group that is teaching people how to be portfolio managers, yeah, that's a different group, and there is a test for that one. Yeah. All right. What do I want to do now? Guess look at yens. Victor, you would think so, but it depends. You have to do this. Like, this is how you do it, Victor. Victor says, hey, well, dollar strong, shouldn't Bitcoin be down? Well, you would have to do this. Demand, supply, demand, supply, and there's going to be one for Bitcoin, and then there's going to be one for dollar. Okay? So now you have to like Bitcoin in dollar, but also Bitcoin in euro, Bitcoin in pound, Bitcoin in Polish zloty, Bitcoin relative to gold prices. I mean, Bitcoin is Bitcoin is Bitcoin. Bitcoin is Bitcoin. Okay? So what is the supply and demand for Bitcoin, and you'll get a price. And then now we have Bitcoin versus dollar. So, well, it depends. So dollar might be strong. We know that. But Bitcoin might be stronger. So therefore, Bitcoin, even when dollar strong, could be rising. Okay? So you have to think of each one as its own indices. So like on a strength scale, maybe this is 8 out of 10, but Bitcoin's 9 out of 10. Therefore, Bitcoin USD would be rising. Okay? Okay? Yeah. Remember, everything's relative. Versus what? Everything is relative. Even at the economic data, like I was saying earlier, it's not CPI that matters. It's CPI over 2021 over CPI over 2020. Or you could do because that gets you, right, the delta. And then you times that by 100 if you want. But then you can also fix this. So it might be CPI 2021 over CPI 2005. Okay. But the issue is 2020, the number is basically wrong. I mean, it's not wrong because it happened. But what if you said CPI, let's do it this way. In 2021, well, first of all, let's say 2021 over, like I said, 2005. Let's say 2005 is just being where you fix, right? That's your chain. It's chained to 2020, 2005 or 2015, I guess is more relevant. So you're like, okay, based on 2015, now we're not looking at the exogenous shock. Is the change in prices adjusted, right, really that significantly different? Because we know, because 2020 was impacted by COVID, this is a really bad number. So an okay number over a bad number is a great number, but over an average number, it might just be average. So compared to what is what I'm trying to say. Bitcoin is going up and you're like, dollar strong. Yeah, well, it's just Bitcoin is stronger. That's all. That's all it's telling you. Okay. Is there a Bitcoin indice? Does anybody know of that? Bitcoin versus dollar, Bitcoin versus pound, Bitcoin versus euro, Bitcoin versus gold, Bitcoin versus yen, Bitcoin versus Swiss franc. Is there such a thing where there's one number, Bitcoin over a giant basket? Be interesting. Like you could do Bitcoin over MSCI or something, but then this isn't priced in dollars, so in a currency. You have to do it in a currency. I guess you could just do it like this. Yeah, but that gets us back to kind of where we are. But how about USDX? That might be okay. That might actually work. Because then this is equal to the basket of currencies, right? It'd be interesting. Not priced, not versus the dollar, but versus the dollar index. No, it wouldn't be Nadex, but it could be, I don't know. Anyways, So what else is going on? Make sure these are all 4 hours. This is daily. This is weekly. So what are we looking for? I expected in the early part of March for yen strength, and then I'm going to buy all these pairs. Cool. I think I said Kiwi would be the last one. So we don't really have a, I mean, we had this move and then it's over. I guess, you know, it's interesting over the years, just more and more people get into the trades, so they're quicker trades. but we got these moves. Some of these are very strong and some are not. So that's where the relative strength kicks in. So right now our data set still has a positive slope and we're growing at a moderate rate. Was that right, Ron? Yeah, it makes sense, right? Saying asked about Bitcoin in 20, 30 years, what's it going to be like? Well, I mean, it has to move from a tradable asset to a currency. Okay. That's a standard deviation regression analysis. Right? Okay, that's a regression channel. Yep. Yep. Well, it's one channel. Okay. So this line here, the calculation is y equals mx plus b. Okay. So you want to look at this like a data, like calculus, right? And so we're like this. Okay. So what this tells us is B is the intercept, M is the slope, which is this rise over run. The run is here. Okay. And what we're finding is from here to here is a standard deviation. And then if you take that out this way, this would be a standard deviation. If you don't like that, I make a different version of this. So let's do simple. And then add price action pivot points. Okay. And there's pivot points now. And I'm doing real-time pivot points because pivot points and regression channels are very similar. They're both using different methodologies to measure standard deviation. Okay, this is overbought. Okay, this is oversold. Oversold. Okay. And there's different versions. Moderately and very much so. Okay. And they're doing similar calculations, that's all. That's right. You got it, Sangam. What do I think about the lawsuit against Ripple? I don't think about it at all. Okay. Well, but you have to understand the math, Richard. It's not predicting anything. It's telling you. You have to use this information to determine whether it's helpful or not. And if we breach outside of what it's calculating, then you're like, well, this is statistically important. But it's always going to work well because it's doing the math. It's simply telling you. Okay? It's not predicting anything. Okay? It'll always be right on every time frame because it's just math. Well, in this case, calculus. Actually, it's not even calculus; it's statistics. So for those that like this side of technical analysis, I highly recommend you take a college level course in statistics. And it's really funny because, I'm at the process where parents are doing research to help plan their children's high school education. It's very, very competitive. It's very, very thought provoking. There's so many different angles and approaches depending on your family, the kid, all that kind of stuff. And people, I don't know why they shy away from AP statistics, and they call it stats. And I hate it when they call it stats. It's not, just say the word. And they're like, oh, but that's AP statistics. I'm like, what's I think AP calculus is more complicated than AP statistics. Why is this one why does everyone back away from it? And I don't know, I don't get it. I'm like, that I think AP statistics is the easier class. It's not that but anyways, at least the parents seem to be afraid of it and pushing their kids away. I'm like, dude, why do you do that? So I would recommend, in fact, currency traders, believe it or not, I recommend a currency trader take a statistics course. Other people are like, well, someone the other day was saying that how they were going to get their CFA. I'm like, dude, that's like an MBA. I don't know how much that's actually going to help you or other things, right? But I really enjoyed taking this statistics class because I translated it into everything I do in Forex. I'm like, oh, that is so fascinating. Oh, that's what's happening. When you calculate standard deviation, right, from a data distribution, and they're like, all right, calculate the standard deviation. Oh, well, that's interesting. You're like, now I can do it. Okay, and it's helpful to understanding of our analysis because it seems like when we do technical analysis, we're doing statistical analysis. We're looking like a MACD, for example, is the convergence or divergence between two moving averages. And what's the moving average doing? Well, it's just averaging these candles, and so we're looking at we're just using these different statistical tools to try to find patterns. Yeah, that's true, Richard, but I think it's just too much. Like, you don't need a 2 or 3 year program. I mean, it wouldn't hurt. It's I don't know. It's like my 5 years that I spent at Harvard. I did it to be a role model to my children. Did it make me a better trader? No. Is it helpful, as, let's say, a fund manager trying to do a raise and you get to say you have 2 degrees from Harvard? No. And in fact, that's very helpful in the competitiveness. But as far as being a better trader, no. So would CFA make you a better trader? No, but it'd make you more competitive, and it would show that you are smart, that you have follow through, that you will dedicate yourself to working hard for 3 years straight. That kind of stuff is helpful. Statistics, if you want to become a good technical analyst, you shouldn't be afraid of the math. So that when you use a tool, like whoever said, well, Wayne, have you tried these other pivot points that they use the square root of the high versus the square root of the low? And I look at them like, well, I know what that means mathematically, and I don't know if that would be very helpful. A lot of it would just be coincidence. So, no. And I delete it. I'm like, no, not really interested in that tool. Now, how do I know that? Economics and statistics. But I don't see the value, but there might be value that someone else sees and that they're using that. But, these boring pivot points that I've been using for 20 years, they're good enough. And I understand what the math is trying to tell me. So I'm like, okay, that's cool. I'm good with it. But the statistics class, I think, took my knowledge or my understanding of pivot points to a higher level. And therefore, I am grateful to that statistics class. because I learned about distribution, trends in distributions, standard deviations from distributions, and then I translated that into what I already knew, into pivot points, and I'm like, oh, snap. That makes sense, right? And so now I can do something similar like with this. So I had this made program for me because I realized this is doing much of the same as pivot points, except because it updates after every candle, I don't have to say, well, this was last month, what's happening this month? No, it's always rolling over. I'm trying to delete. There we go. It's always rolling over. So we'll add a candle and drop a candle. So now I have dynamic pivot points. Now, is it the same calculation? No, but it's very similar, and similar enough that it should work statistically pretty close. Okay, and then you add to that maybe something. Okay, and you say, well, Wayne, I'm a bull on this, and I want some buy zones. And I'll say, are you a swing trader or position trader? And you're like, well, Wayne, we're on a daily pivot point, right? So I want to be a monthly. So I'll say, okay, so let's add to that. Let's go to biased pivots, and you want long-term, because we're on daily here, you want a long-term analysis. As a bull, you're a bull, right? Yeah, so bull, monthly, midpoints, okay? And now you're combining two different things. And because you're a bull, you're like, okay, let me see if I know how to trade. This is a buy because the pivots, both based on market and price, this is a buy based on market and price, and this was a buy based on market and price. Okay. I think so. I have to read an email that I received about an update. So I think so. But you see how that, guys? Remember, these are just tools. I think if you, whatever tools you use, the most important thing here was you were a bull. Okay, and therefore you buy low. At support. Okay, so you only buy after red candles at what you identify as support. So this is a roll reversal, or it's at the bottom of your channel, whatever you want. So that's a trade. Red candles, again, roll reversal, so that's a good trade. Okay, here again, roll reversal, that's a good trade. So do you need the channels? No. Do you need these pivot points? No. Could you just use price action? Okay, let's see. So that's a buy. Okay. That's a buy. That's a buy. All you had to do was make a decision, are you a bull or a bear? Okay. Now fundamentals are also helpful. Okay. Okay. This was predictable, and that was predictable. The rest is technical analysis. Okay. Once again, fundamentals were helpful to know when to get out because we knew to get out here before the drop. Okay. Cool. Now, I would have expected some more yen strength here. Yes, we expected this at this time. I would expect more. We haven't gotten it. Okay, fine. But notice that the most important thing is you make a decision, and then you use the most basic of technical analysis. Right? I fear that a lot of people lean on the tools we use to do the job for them. But that's not what we do. You do your job, and you improve your performance using tools. Do you understand that? I need you to turn your brain around. You don't work for your tools. Your tools work for you. So if you don't have an opinion, if you haven't made an assumption, so like in here I said up, in here I said out. Okay, very helpful, right? Okay, these are all decisions that you've made or haven't made. You don't need any indicator. Fundamentals don't support the trend, Richard. They create the trend. It's the reason. Somebody here said, build the factory. That's it. You have to understand, what makes the market move isn't currency traders. We're not that important. We're tiny. We're a drop in the sea. What matters is business activity. And most businesses don't say, wow, look at that. What's the value of the euro today? And if they do, if they are worried about it, they just hedge it out. Futures, options, swaps, all kinds of ways. Okay? But here's the thing. Somebody says, build the factory, and someone else says, well, there's some exchange risk. So then they hedge it out, right? Like it's after. What we're interested in is this is happening. And it's not one factory. It's hundreds of factories. It's thousands of factories. It's business activity. It's money leaving Japan. It's money flowing to Europe. Not necessarily the same money. Okay, money is leaving Japan because an increase in macroeconomic activity and less demand for Japanese government bonds. Okay? Meanwhile, around the world, the way I explained it in here is that the USA is too expensive. Americans in here are going to be forced to take profit because they made too much money on Apple, too much money on Amazon, too much money on Google, too much money on Facebook. And they're like, well, we can't buy more because our mandate says we're not allowed to. So we need to do something new with our money. So I said, well, buy Europe. It's cheap. How could you buy Google when it's trading at like 48 times earnings or something crazy, right? So you go to, I said, buy a company in Holland. Buy a company in Germany, right? Okay. And by the way, right, that was back in here when euro was cheap. And maybe I don't know, I'll make it up, like maybe BMW trades, I have no idea. But let's say BMW at the time was trading at like 12 times earnings. And your Google shares that you just took profit on, some of which you just culled the herd a little bit, because you're mandated to, we call it, right? It's rotation. right? It's called rebalancing. So at the end of the year, traders rebalance their portfolio, drop for 3 weeks, and they're like, well, what should we buy with this new cash? Oh, let's buy some BMW stock because it's cheap, because euro's cheap, plus it's trading at 12 times earnings, and plus it's BMW. Everybody likes BMW. They're boring, but everybody likes them. Man, our BMW is boring. But they're great cars. Okay? And so that money is rotated. And so people around the world are like, let's invest into BMW. I'm just wondering what it is, actually. BMW multiple. Have to stock multiple. I don't know what the heck all this is. Well, maybe Yahoo Finance knows. So their profit margin is 3.5%. So when interest rates in Europe go to 4%, sell it. Balance sheet, return on equity. This can't be BMW. 50% is held by insiders? It can't be. BMW.de. The beta, right? The beta is 1.34, so it's got a moderate beta. The stock seems to be up 40% from when we were talking about buying it. Doesn't show multiple. Book value, current ratio, EPS, 5.0, quarterly earnings growth, 17%. Net income, EBITDA. Why doesn't it show multiple? I guess I have to calculate it. Oh, wait, maybe in here. Market cap, enterprise value, trailing, forward, PE, price per share, price per book, enterprise over revenue, enterprise value over EBITDA. Guess I have to calculate it by hand. Anyways, I'm not going to do that. But it looks like if you bought it 6 months ago, you made a ton of money. I guess that was the whole point. Does anyone remember talking about rebalancing? Profit taking at the end of the year, rebalancing, having too much of individual stocks, so you have to take profit, then you have cash, and now you don't want cash because then you'll be hit by redemption. So now you got to take your cash, buy something cheap, but everything in America is expensive. Real estate is up, the stock market's up, even the bond market at that time was up. So like, what do? You're going to buy some European stock, for crying out loud. Don't buy French because it's French. Don't buy French stocks because they're in France, right? So anyways, oh, you like the 750? I have I bought a Porsche. I'm really impressed. It's a really well-built vehicle. I'm like, damn. I'm surprised. It's solid. Like, it's solid. The steering is amazing. The suspension is amazing. So I'm actually pretty impressed. I don't really like cars. All cars are crap, but this seems like a... Anyways, we'll leave it at that. I think it's been a couple hours. Yeah, I guess it's good enough for the girls I go with. So, hey, thanks for hanging with me today. We did some technicals, did some fundamentals. It's just we're doing our job. We got some key numbers here. key things going on. So I hope you have a plan for what you want to do between now and the end of the year, and that you're doing it. I hope you do. I hope you're doing what you want to do. Otherwise, if you're not doing it, somebody else is. So know what you want to do, and then have the strength to get out of bed and do what needs to get done. So peace on earth. May the pips be with you. May our profits be above average. Thank you for being a subscriber. Thank you for clicking the like button on your way out. And also, if you could, leave a comment on the recording. Right on, Barry. I'm glad to hear that things are going well. I wish you the best. See you.